On today's World Insight, momentum of recovery for the Chinese economy in the second half of 2024. What are the priorities and policies? What's the real growth potential despite headwinds?
Hello and welcome to World Insight with me, Tian Wei. The Communist Party of China leadership held a meeting on Tuesday to take stock of the current economy and set out priorities for the second half of the year 2024. The country's economy has been generally stable and made progress since the start of this year, according to an official statement. The country has sustained the momentum of economic recovery and moved faster to foster new growth drivers and competitive edges. But the domestic economy faces external headwinds. The U.S. Trade Representative's office said on Tuesday that steep U.S. tariffs on many Chinese imports, including electronic vehicles, batteries, and computer chips and medical products, will be delayed by at least 2 weeks. So what is the real growth potential for the year 2024 in China? And whether some of the latest policies will address some of the headwinds faced by the Chinese economy. For now, deeper insights with our panelists. For more on China's economy in London, Ian Beck, a professorial research fellow at the European Institute with the London School of Economics and Political Science. In Shanghai, Joseph Gregory Mahoney, professor of East China Normal University. In Beijing, Liu Baocheng, dean of the Center for International Business Ethics from the University of International Business and Economics. Gentlemen, welcome to the program. China is keen to develop its economy and speed up the growth rate and maintain momentum of the economy. Professor Liu, from the goal, where are we right now?
Well, China is now reinventing its views towards its own modernization. One is to boost more of the innovation, so the government is very much resolved to support the Chinese innovation drive so that we are able to switch the gear in our economic structure by reducing more of the labor-intensive industries and also environmentally unfriendly businesses. And then, we go for particularly now the digital economy where the artificial intelligence, big data, cloud computing can play a very important role.
Well, of course, a lot of things coming out of the third plenum tend to be abstract in terms of how to interpret it. But when you say reinvent the wheel, that's certainly an interesting way of looking at it. Professor Mahoney, the Chinese economy has been for long relying much on exports. Now you could see there are structural changes in the destinations of Chinese exports. For example, more to Southeast Asia, with ASEAN being the largest trading partner. However, the Chinese exports are still very strong. So how should we understand the structural changes of the Chinese economy for now?
Well, as you noted, the exports have been surging. We saw this in the first 2 quarters, in fact, beating expectations. For example, going more into Southeast Asia, especially Vietnam and Brazil, in terms of the BRICS relationship. But we've also seen an unexpected increase in export-led growth to the United States. And that's probably driven in part by exchange rates that favor trade, that favor a strong dollar and a weak yuan, and certainly the U.S. ambition right now to try to limit inflation in this difficult election year. Nevertheless, I think the system understands that this is the old model, that it remains too vulnerable to external pressures or headwinds. And what we see in China itself is the need to still spark a more robust and sustainable domestic demand to make Chinese production less vulnerable to those outside forces.
In the latest meeting following up the third plenum, the Chinese Communist Party leadership suggests there are still various risks and potential dangers in major sectors, as well as challenges resulting from the replacement of traditional growth drivers with new ones. It also said that those are all issues in the course of development and transformation, end of quote. Professor Liu, how should we understand this? Because for decades, China has been saying problems will be resolved along the way of development. And it seems that this latest communique out of the meeting also suggests a similar logic. Do you see a continuation and, shall I say, sustainability of concepts like this? Or there has been some quite a big change in terms of mentality? Tell me more about your thoughts.
Well, in our latest book, we have a very strong proposition that past dependence will cause diminishing return. So now China will have to engage in an uphill battle, but it doesn't mean that we are there to totally forsake the competitive advantage we have in terms of the big industrial cluster and the manufacturing capacity. Another consideration is that because China has a great imbalance in terms of level of development and level of resource supply. So therefore, we need really to make customized policies towards different localities. Therefore, we maintain our conventional industry as competitive as possible, but introduce more of the new equipments and new technologies so that they can add more value into that. And I think more decisively for this communique and together with resolution is to really to strengthen the government capacity. So I counted there are 44 times has been mentioned with regard to governance in the communique of the third plenary session.
Professor Begg, how do you look at the realities of the Chinese economy? Not only its own internal structural changes, but also its external environment, particularly the latter, may I, if I could just suggest?
If you look where China came from decades ago, the transformation is phenomenal. It's a transformation that initially was about what economists call extensive growth. That's to say that you're catching up with other parts of the world, exploiting the labor force coming from the regions that were not particularly dynamic in the past, copying technologies and so on. What I see in the way that China is now evolving is moving towards what we call intensive growth, which is based on innovation, new research, trying to find market leadership in areas where Chinese didn't have it in the past. And that is an important transformation. On the external environment, I think the important thing to recognize is that China continues to have trade surpluses against major partners. And that is what is triggering this backlash against Chinese exports in some areas. Now, the accusation on one side is China is subsidizing, for example, EVs. On the other side, the accusation is that these countries are simply not competitive and therefore China should be able to prosper. It's a difficult piece of political economy. And what I see is countries like the US and now Europe, in many respects, saying to China, yes, you are successful, but you are too successful, and it's based on a model which we find to be unfair competition. That backlash is going to be an important phenomenon in the way China evolves in future. And if you allow me one third point, it is that China, as an aging society, is going to have to wake up to the notion that it needs to raise the share of services in the economy and not concentrate exclusively on manufacturing and on exports.
Some of the perceptions Mr. Begg mentioned about the Chinese economy, rightly or wrongly, that has become the major rhetorics you see in some of the major economies, particularly in the developed economies toward China. With that as a reality in the backdrop, what can China do? Do you see there is enough solutions being provided at this moment, Professor Liu?
I think the government can really take more seriously of the global norms that China has been committed because, for example, in terms of the anti-dumping, countervailing duties, and now subsidies has been wound up, but now the EU is backtracking 5 years. And so that's something that we need to really to carefully think about, because under WTO rules, there are restrictive, forbidden, and also permissible areas of such sort of subsidies. So you can't really inject dope into a athlete that's ready to participate in the Olympic. But rather, you can really give them better nourishment, give them better education. And so, therefore, we need to remove the subsidies more onto the upper stream of the entire supply chain instead of there to amplify the productive capacity, ready to go to the market. The other is that still we need to provide more of the level playing field between different market players, be it state-owned ones and private ones and foreign invested ones, because this round of communique and resolution made it very clear that there needs to be equal access and equal footing of all the market players, so that they're able to play more of the market role, so that the companies can stand out simply by reducing the cost by smart manufacturing instead of relying on government transfer payments or subsidies.
At a critical time for the Chinese economy, one could read the urgency of dealing with some of the deadlocks or issues of concerns for the business community in China. For example, in the latest communique out of the meeting of these Chinese Communist Party, the market mechanism of, quote, survival of the fittest, quote, should be strengthened, and exit channels for backward or inefficient production capacities should remain unclogged. These are the words coming from there. Now, Mr. Begg, when you are reading these words from where you are, how much does it provide you with a better understanding for the future hope of the Chinese economy?
Well, I think first there's a nice irony in a Communist Party proposing all these market mechanisms. And I think that's what those lines in the communique are telling me, is that you're trying to move to a model of capitalism which is much more market orientated than it has been in the past, when, let's face it, some of the state-owned enterprises had been big drivers of economic change. This is a maturing of the Chinese economy. It's becoming one of the leading mature economies of the world, moving up the value chain.
Well, I would agree with Professor Begg in part that China is moving up the value chain, that China is trying to give a greater role to the market. And we see this not only in terms of the policies like trying to find better mechanisms for entry and exit and so forth and so on, but also the invert or the inversion that we see in the communique, whereas in the past the goal was to reform in order to allow more opening up, but now it will open up more in order to push reform. Now, that's one side, but the other side is the communique makes it very clear that the government will remain unswervingly committed to the public sector, to state-owned enterprises, that this is the backbone still of the socialist market economy. But there is a need to better balance between the private and the public sector to try to ensure that they are complementary, that they're not competing with each other. The private sector is better at innovation, at driving tech forward, and the state-owned sector needs that sort of upgrading in order to reform itself inside out to improve its efficiencies and competitiveness. Now, this is the theory, and this is what they aim to achieve. But I would suggest that it's a little bit different than the characterization that Professor Begg has offered.
In the meeting being held on Tuesday this week, it also called for strong and effective support for gazelle companies and unicorn firms. And it also urged industries to strengthen self-discipline to prevent rat race and irrational competition. Now, this one could imagine is quite much linked to the so-called overcapacity issue that China is debating with some of its trading partners. So on that, Professor Mahoney, your thoughts?
Well, I think that the term overcapacity is a little too fraught. That is a very complicated issue. It is the case that other countries failed to compete. But, we do have an issue in China, for example, in the EV industry. I've seen numbers that suggest that there's something like 200 EV firms out there. And, there are 3 or 4, maybe 5 that are going to survive, that are going to be global leaders, that are going to be able to compete wherever they go. And this is just a natural, sort of boom bust thing that we're going to see in a country of China's size, where they're encouraging these sort of new developments. And we've seen a similar phenomenon in solar panels. So we are going to go through a period where we need to see some consolidation. We're going to need to see some of those firms exit, and we need to make sure that local governments aren't propping up and carrying local firms just to keep their employment levels or their other sort of tech-driven KPI inflated so that they can, move forward in their own sort of immediate sphere of influence or interest.
Yeah, Mr. Begg?
If you look at what happened in the US, in some of the areas in which the US became a global leader, it's particularly centered in Northern California, the Silicon Valley area, where you get all these new companies emerging from next to nothing. You're seeing something similar in China now. Just think how quickly the EV sector has emerged from a low base. What I think the communique is trying to tell us is that there is something new technologies are coming to the fore. These are the ones which are going to underpin the Chinese economy in the future. Gazelles are very nimble. Unicorns are mythical beasts. I don't think anyone has ever seen a unicorn. But a unicorn company is one which breaks the mold, breaks out of an existing paradigm and tries to change things.
Professor Liu, same question.
Well, I do not think the government can really do a lot more to deal with unicorns or gazelle, etc., because the market constantly changes. It is very difficult for government really to capture the real definition as the time progresses. So what the government is there to do, one is, again, based on the success of the past more than 4 decades, to deregulate and let the companies, let the CEOs, and let the local government to address some of the details. And the other is the government is there to provide more of the social security, more of the education, etc., for all companies alike, because you never know who is going to be pop up is with a unicorn and who is going to lose the corn along the way. Yeah. So therefore, to resist the temptation of excessive intervention, however good intention it might be, is really the key to strengthen our governance.
Well said. According to the latest news, the U.S. Trade Representative Office recently suggested its tariffs against the Chinese electronic vehicles, as well as medical products, batteries, computer chips, might be delayed for 2 weeks. Now, this in a context of time is nothing, but it is certainly interesting to see how these topics are being evolving in different economies. Now, Professor Liu, how do you read the latest decision coming from the US and also the EU?
The high tariff over there is really a double-bladed sword. It's going to hurt its own economy, plus it's going to hurt the progress of green transformation, particularly for EU. And the North America, of course, also included. And the other is that you really raise the inertia of those the competitors. So therefore, addressing the aggressive and sometimes predatory, the Chinese, for Chinese exports into those markets. And first, they need really to see that whether it is really a fair market competition. Second, they need to see that what are really the benefits that they can provide towards multi-stakeholders instead of only looking at the domestic competition. So they need to consider more of the consumer benefits and also a long range, the benefit towards the climate change issues, which is one of the top concerns of those countries.
Interestingly, Professor Mahoney and Mr. Begg, we've seen some of the major Chinese electronic vehicle companies are not only not discouraged, but rather quite keen in operating and also cooperating with more partners in both North America. For example, in Canada, BYD is seeking further cooperation right now, and also in the European market. So how do we see, in the press, there has been such a rhetorical war going on about electronic vehicles, but in reality, these Chinese companies are actually quite active in promoting the future.
If you know that you face a risk from political objections to your exporting, one well-tried approach to deal with this is to try to integrate into the economy that you're trying to sell to. It's what foreign investment has been about for decades. You've seen it in the export of American capital after the Second World War. You've seen it in European capital flowing recently across the Atlantic because of the incentives of the Inflation Reduction Act in the US. So it's a very sensible corporate strategy because it means that you engage with the recipient markets rather than being seen as a hostile, a source of hostility to what they're trying to do. But there are limits to it. And I think this is where the tensions arise. If BYD, for example, is locating in Hungary, it's not locating in another European country. And that other European country is going to object and say, well, why is Hungary benefiting and we're not? So you have to understand the political economy of competition in a multi-country organization like the EU, just as you have to do in a multi-state country like the US, where something that goes to, let's say, Alabama does not go to Michigan.
Very interesting, yeah. Professor Mahoney?
With regard to the United States, clearly there's a very different situation there, in so much as the U.S. government has demonized Chinese EVs, described them as potential drones and spy devices that can be, used as enemy vehicles by the Chinese government. And so I think that the key point, though, to recall is that the Chinese EVs don't have a position in the U.S. market. And the U.S. keeps raising tariffs with this idea that this is going to prevent dumping, some eventual dumping at some point. But again, as Professor Begg alluded to, the difference between Alabama versus Michigan. Michigan is a swing state right now, and we know that both candidates are really trying to pander to the legacy automobile manufacturers based in Detroit with regard to their anti-China EV policy, which also plays well in terms of the other anti-China policies that they've been building and promoting in the U.S. for the past 8 years or so.
To add to that, when China first opened its market, there was also very much a fear from the Chinese industries that they are dancing with wolves. But over the past more than 4 decades, the Chinese businesses, through dancing with wolves, they turned into wolves. So therefore, inviting competition and also play on the same level playing field is something that's very important. And that is also why the Chinese Communist Party's communique made it clear that Chinese reform needs to be stimulated by Chinese opening, which means that inviting competition and join the competition on a global basis.
So how do you see, with increasing sophistication, the space of potential can be for Chinese companies and their global partners? Professor Mahoney, please.
I think certainly, we should look at how Chinese firms, for example, are still expanding their business in India, how Chinese firms are still moving into the global south, building in their market share in places where we have the Belt and Road Initiative moving strongly. How we see China moving in tandem, its diplomatic efforts, but also its trade efforts expanding in the Middle East. So it's not all about the EU and the United States. There are many other opportunities, and these leading firms, they're capable of competing in the most developed countries, but they're also much more competitive in the developing ones as well.
Okay. Professor Beck?
Two things. One is China clearly has moved up the value chain. It faces the new competitors like Vietnam, who are taking some of the market share lower down the value chain. And these are things that testify to China's advances as a maturing economy. So it's reaching a new level compared with major competitors. And one maybe somewhat frivolous aside on the question of governance. The German language has no word for governance. Maybe you want to think about that.
Interesting. Professor Liu, please.
The wisdom of the business leaders and also the financial power of Chinese businesses. Of course, the Chinese government can also do a better way, play a better role in addressing some of those issues so that they can really clarify some of the ambivalences in terms of the diplomatic relations and build a better protection belt for Chinese companies in addressing some of the hostilities against China from particularly the political circles.
Thank you so much, gentlemen, for the three of you for coming to our discussion. Really appreciate it for bringing to us your insights and interpretations of the latest Chinese political meetings. Appreciate it. Thank you. And that's all the time we have for today. If you'd like to know more, search World Insight. Check out our YouTube channel. Follow us on X and Facebook. I'm Tian Wei. On behalf of the team, thanks for tuning in and bye for now.